Alright, so new video. I haven't made a video in like, I don't know, a month and a half maybe. Um, just about to review the past 2 weeks maybe. Yeah. Alright, so the past 2 weeks has been very rough. This month, March, has not been the best for anybody at all. Well, I mean, there is some people who, I guess, but from what I've seen on social media and people that are around me who I'm connected to, it's been a pretty rough, very slow price action of a month. I had to switch to micros, um, which I think me switching to micros is gonna change my trading a lot more. I'm using 7 contracts with micros, and I'm shortening my stop loss to $150, and then I'm keeping my take profit to 1,000. Now, so what that changes is that I need a 30% move, and now my stop loss is at 5%, which is fine. I don't think that's a problem. So today I didn't take no trades. I didn't take no trades today. I probably would have shorted that, but I would have kept my stop loss at break even, so I would have hit break even if I would have entered today. Um, so today wasn't really a good day, I guess, for me, or it wouldn't have been. Um, so yeah, we're gonna look at 25th. Now today we see a green open, and then a continuation, signs of continuation, which we don't see any. We don't see that hitting take profit, unfortunately. So and it does reverse right after. So now we're gonna be moving to Tuesday. So this would have hit break even, most likely. Um, Now here we can see that there is no continuation, but we do see a aggressive pull down to the downside, which is good. Would have took that trade and would have hit take profit right here. So this would have been a one. So this would have been a one. Now we have to go to the woman and make sure that it really would have hit a win. Yeah, most likely it would have. We don't really see large movements to the upside. We don't see large wicks to the upside on here, so it was pretty smooth to the downside, which is good. We're gonna go to Monday. All right, Monday was horrible. Look at this. This range is it's horrible. Yeah, we don't see nothing. It's horrible. Um, so one win this week. Now we're going to last week's, which last week's on Friday we do see some movement. I do not see no movement on the second candle though, so this setup is not. It wouldn't be really good for me. Now last week I was sick, but I did keep an eye on the market here and there. Um, as you can see here, we see it continues to the downside, but then it wicks back up. Bollinger Bands are showing pretty good of that. We see that hits oversold levels, then it springs back up. Um, just say 30%, and then we'll switch to 1 minute. Let's see if that works out. It does work out. Price does look like it does work out here. So this would be a win. High probable win. Um, so we have 2 wins this week, this month. No, but the thing is that how would we know if something's a reversal or a continuation, right? That's the main key. And I'm going to be straight honest with you. We don't. All we know is that a continuation, a big move, right? So all we know about my strategy is that we focus in on the 5 minute second candle of after market open. That second candle determines direction. We either see a reversal or we see a continuation. The second candle is what shows the direction of the market for that day, for the next at least 30 minutes, right? So, what that tells us is, and that gives us 50-50 chance that it is a continuation or a reversal. Unless you have some macroeconomic, um, unless you have a macroeconomic edge, then then that's just how it is. You can't predict it. We're just following. So, um, I really don't know where it's gonna go. You have to rely on your intuition and what it looks like it might go. If it looks more pushy to the upside for a continuation, then it might be a continuation. Take that trade. If it looks, if it's the first candle is a green, it's a bullish candle, and it looks like it's gonna reverse because the second candle keeps pushing to the downside, then go for it. Go for that short. Go for that reversal setup. So what really saves you is your risk management. That's what makes you profitable. Wins will come, and that is the thing. There's a lot of people who do make wins, right? There's a lot of people who win their trades. But the people who stay profitable are the people who take advantage of those wins and they prepare for the losses. This month I'm still up, but I've lost around 15 trades and I've only won one trade. But I'm still up on the month. How is that possible? Risk management, discipline, trigger discipline, click discipline. All that will play key into your trading. It'll make your accounts last way longer. It'll make more payouts come through. It won't let you blow your account. Those are the key. That's the key to profitability. Months like this doesn't affect me. It just doesn't. Because I'm so good at losing. That's key to success in this. It's being good at losing. Being so good at losing. Controlling your losses. That in anything will take you far in anything. Controlling your losses in your business. Being an entrepreneur. Owning a business. Controlling your losses. That is what keeps your business firm and everlasting. So this range again is it's horrible. Price action. see this again. Bad price action. Continuation setup. Not enough. Not good price action. Again, bad price action. Again, bad price action. What is this, bro? It could have worked, but it's still weird. It's not good price action. Again, bad price action here from my strategy. This level was taken out. I don't know what level though. It was already taken out. But that's the beauty of it. Not good. Not a good setup for me. Not a good setup for me. Too much wicks. Not enough volume. Not enough direction. What I want to see is a aggressive pull to either side. I don't want to see a long, small body, small body, small body. I want to see large body. That is what I look for in my setups. Again, short here. What can you tell? Like, how can you tell if something looks more like a short? What looks more like a reversal? What looks more like a continuation? As you see, just price pushing its ceilings. So, for an example, if you can, if you can understand what hesitation is, and I'll show you in a second, is that the market will hesitate a direction before it reverses. So if you're patient enough and you don't enter early and you don't enter late, you can really eye out and tell whether something's hesitating or not. If the market keeps pushing up like this and it keeps hitting this level right here, let's say it's this level right here, and the market just keeps hitting this and keeps hitting this, and it comes back down, it keeps hitting this, keeps hitting this, keeps hitting this, and it's not breaking the ceiling, right? It just stays in this one spot and it keeps hitting. Eventually, what you'll see is it keeps hitting, and then it'll turn into a short, and it keeps going down. But what happens is that sometimes what you want to see in a continuation, right? Let's say there's a long continuation, right? This is a green candle. The next candle, it hits this, and it keeps breaking ceilings. It's this level, and it hits again, gets higher and higher, higher and higher, higher and higher, breaks the ceilings. Those, and it's set up like this and like this, where it breaks the ceiling, it passes those zones where it's not hesitating. That is how you enter. Those are the setups that you enter. Now, let's say it's a reversal. The market just keeps hitting this right here, keeps hesitating. It isn't break ceilings, but it keeps hesitating in this zone right here. All right. So whenever I see like there's like a spot where the candle just isn't passing, That zone right there is like a rejection zone for me. So I zone it out, right? I mark it up, and it isn't passing that zone. So what happens is that eventually it'll drop down, and it'll turn into a short. It'll turn into a red candle. And what you want to do in those situations is enter it on a short. That's how it works. You look for those rejection zones, and when you eye it out and you see that aggressive pull to either direction, those are the pulls, right? You follow that momentum. So this is the reversal. I won my trade from I won my trade on the 3rd. So 3rd of March. Yeah. So the trade that I took on March was a long. This was a red candle, and I just saw the market just keep rejecting this zone, and it just went up, sprung all the way up, and it hit my take profit. It was a pretty alright trade. Um, Maybe I was lucky, maybe I wasn't. In the moment, I did see it, but afterwards, like you can tell that there was not a lot of volume. So if you look at this after you took the trade, you can tell the market wasn't at its best. Wasn't at its best. So um now so what we're gonna look at is I haven't turned on my computer in a minute, but we're gonna look at this day. So what do we see in this? So what do we see here? We see a small wick under the body of the second 5 minute candle. What does that tell us? There's lit there's little to none hesitation to the down to the downside. So it no, I'm sorry. There was hesitation to the downside. The market did not want to go to the downside because if it did, it would hesitate up here. It wouldn't be breaking those ceilings. You see how it just continues to spring up? And we see that it hesitated to the downside. A small wick, what does that mean? The market didn't go that bearish before it went up. So now what we have here is an engulfing candlestick. An engulfing candlestick is a candlestick that is very sure where it wants to go, and it's just one order. It's full of orders. This candle right here is just full of orders. It's nothing but buys. It's nothing but buy orders. That's what it all is. keeps breaking ceilings here, right? So what you do is you enter on it. Keeps breaking those ceilings, right? And then hits take profit. Now let's look at this one. The second candle opens. All right, what do you see in this? Right, second candle is open. You wait patiently. Little hesitation to the downside. Keep that in mind. So we're looking for longs maybe. Now we're seeing those breaking those ceilings where it just keeps pushing up. That's a good sign. Signs of continuation. Small wick, creating a big body. Signs of a continuation. So what do you do here? You answer that. It's a good setup. Look, keeps hitting those ceilings there. Now I'm very patient. I enter it. Keeps breaking those ceilings. Small wick. No signs of it wanting to be bearish. When there's no signs of it wanting to be bearish, it's most likely not going to be bearish. When there's no signs of it wanting to be bullish, it's most likely not going to be bullish. So just keep that in mind when you're looking at that 5-minute candle. When it's signs that it wants to be something, it's giving you those signs. If it keeps pushing those ceilings to the upside, it's most likely going to go to the upside. If it keeps pushing to the downside, it's most likely going to go to the downside. Now I got a little greedy here and I put the 2K take profit because I wanted to aim for a big profit. But saw signs of it coming back down, so I was like, can't be too greedy. But it hits take profit eventually. It's take profit. Not all my wins are in here for some reason. But market opens bearish. It closes bearish. What do I want to see? Continuation to the downside. That's what you always want to look for, is for that continuation. Are there signs that it's going to continue? If there's no signs that it's going to continue in the beginning, it most likely will not continue. Those are the signs that it's going to reverse. And that's when you start looking for that reversal. What I like to do is I look for those signs of continuation first, then I look for the reversal. Now I enter here. As you can see here, market opens, very little movement to the upside. Starts breaking those ceilings, starts breaking those floors to the downside. Signs of a continuation. And it hits take profit. All right, market opens. The second candle opens. What do we see here? We see it. So what did I just say? I said when the second candle opens, always look for the continuation first. When you don't see those signs of continuation, it's a reversal. You look for certain signs of something. When it doesn't show you those signs, it is the complete opposite of those signs. So when it is not signs of continuation, if it's not a continuation, then what is it? It's a sweep. It's a reversal. But as we can see here, all we see is just signs of continuation. No price action did not move anywhere near up. It's sweeping down. It's going down. I'm sorry, not sweeping down, but it's continuous down. Breaking those floors right here. Keeps going lower and lower. It's not having itself have wicks at the top. It keeps hitting those floors. Keeps going lower and lower. No signs of it going to a reversal. What do we also see? MACD reverse. Signal line MACD reversed and met. It crossed each other. It did that V right here. We see red histogram, shorts, momentum dropping. Just keeps hitting those floors. That's how you can tell a continuation. No signs, just straight signs of continuation. Market just kept going lower and lower. No wick, which means that when market opened, it did not go up at all. Very to no wick, little wick. When there's no signs of a continuation off the start of the candle open, then if there's no signs of a continuation, then it's a sweep. But if you see those signs of a continuation, it's most likely a continuation. This candle here, the candle on the 5-minute chart from 9:35 to 9:40 is the most important candle of the whole session. And of years and years of doing this, I noticed it. That candle is the most important candle in the whole session. Whatever the market does in those 5 minutes will determine the rest of the day. Well, that's it for the video. Always remember, stay disciplined. Always stay focused on preparing for your losses. When you prepare for your losses, doesn't matter if you have 2 trades a month, you will get paid. And that's it.